Everyone, I'm Ruben Cisternino, Head of Trading at Coinrule. Last week we discussed the huge 20% price spike that Bitcoin experienced in a matter of just few hours. Since then, the price kept trending upward. Everyone was so optimistic that a new alt season is coming soon. But yesterday, the price cooled a bit, breaking the upward trend, and fell 5%. What does that mean? From my point of view, that simply means that we cannot go up vertically, and the crypto market still tends to overreact significantly on strong price swings. Speaking of this, yesterday Binance released a very interesting article about crypto assets market cycles. The thing that I found most interesting was the empirical findings to prove the effect of HODLing on Bitcoin price. Here's a chart from the article. The price of Bitcoin is compared to the market capitalization weighted for the actual on-chain transaction occurred in that period. That is based on the UTXO market cap. The advantage of this methodology is to exclude the non-active accounts, or hodlers, from the calculation of the market cap. And using this methodology, we can notice that during the 2014 bear market, the price of Bitcoin fell 75%, while the UTXO market cap actually rose 15%. In the same way, in the 2018 bear market, the price drop was 70%, but the market cap, weighted for the actual transaction, only fell 5%. What does that mean? That in every market cycle there is a significant share of investors not interested in trading, but they just want to store their coins, being confident that the price will rise again. But that leads to another conclusion also. There is another share of investors, smaller but still significant, and they are mostly traders not interested in holding long term, but they are just focused on short-term gains. They are the main driver of the short-term price moves. And also consider another thing, cryptocurrencies are still a very liquid asset, and if you take out the available to trade coins from the floating of the coins to be traded, that component is even stronger, and the effect on the price is even bigger. Fewer coins to trade mean that even relatively small order quantities can move the price significantly. That's how optimism drives up the price parabolically, and on the contrary, optimism can turn into pessimism also very quickly, causing a market tailspin. Emotion and feelings in trading can be very damaging. That's why planning a trading strategy, even a simple one, and run it automatically can free you from the daily painful stress. This is even more reflected in the altcoin market. If we compare the price of Bitcoin with the total aggregate market cap of altcoins, we clearly notice that their price, the altcoin price, underperform Bitcoin in times of downturn. When panic spreads, altcoin price usually dumps pretty hard, probably also because of its illiquid component we were talking before. But these dumps also create good opportunities. When Bitcoin price recovers, like in this situation, they catch up with Bitcoin, and in times of low volatility on Bitcoin price, as we saw in this period, they also tend to overperform. So now we think that the worst of the bear market could be passed, and it's a good time to start accumulating again with caution some altcoins for the next bull cycle. With Coinrule, you can easily set up an automatic trading strategy to accumulate your favorite coin. For example, we like Litecoin that here we have in the yellow on the yellow line. It posted a very impressive performance since the beginning of 2019. So for example, in very few steps, we can set up a strategy like this. If Litecoin has a price decreased by, let's say, 5%, by 20 US dollar amount of Litecoin with my BTC wallet. Execute it 5 times, name it, and launch it. Here is your automatic trading strategy live, just created in a matter of few minutes. So never rush into a trade. Plan your trading idea, implement and run it with Coinrule. Follow us on Twitter and on Coinrule HQ for more market views and trading ideas. Trade safe!